Welcome to the June edition of Around the Markets. My name is Mark and we will start with our pivot charts of the S&P 500 and the Nasdaq 100. Next, we will analyze the market momentum for the S&P 500 and after that we will look to some entry points for the crude oil and we will analyze the ratio between the GDX and the SIL ETF. Let's get started. Here is the pivot chart of the S&P 500. Last month we discussed a possible A, B, C scenario with a target of 4,800. However, the market chose a different path and broke the resistance around 5,180. So we can extend this pivot zone and delete those arrows. A few days ago, the S&P tested the upper pivot and you can see the 50-day moving average around the same level. In the short term, the S&P needs to stay above that red area. Below that, we see support levels around 50.50, 49.50 and an imported zone at the level of 47.50. Next, we have the pivot chart of the Nasdaq 100. You can see a rising short 50-day moving average and a long 200-day average, indicating an ongoing upward momentum. The chart continues to move nicely in the rising channel. Regarding the pivots, I'm gonna extend the pivot from 16,600 and make it a little higher because we saw here a support or bottom on the short term. So I'm gonna place it something like this. This is a very important pivot. On a shorter time period, it's a bit more challenging due to the sideways movement of the Nasdaq. First, I will draw a line, a second line. I see around these levels a lot of support resistance. The zone between them becomes my pivot. Something like this. I can delete those two horizontal lines. So like the S&P 500, if the chart stays above the pivot, it's fine. You'll get a warning if the price falls below that red pivot, because it means not only the pivot is broken, but also the channel. So the area around the 16,500 is very important for the Nasdaq. Next, here you see the sentiment study. It shows the market momentum for the US and Europe. On the left, you see the SP 500 and on the right, you see the Stoxx 600. Below, the market momentum is drawn, considering a dozen criteria using trend, momentum, and volume indicators. Now, looking at Europe, you see a rising chart, and the momentum remains steady, meaning about the same number of stocks are participating in the rise, supporting the overall trend. In the US, we also see a rising chart, but since the top in March, the momentum has dropped, meaning fewer stocks meet the criteria. This is a sign of weakness, so it's important to monitor your portfolios closely in the coming weeks. With my software TrendStock, I can set up my own market momentum analysis. The following study shows 5 compartments with the price chart on the top. The next 2 inner windows shows the number of stocks making a new top, the green line, or a new bottom, the red line, over a period of 1 year and a period of 3 months. The bottom 2 inner windows shows the difference between the new lows on 1 year and the new highs on 3 months. And below, we see the difference between the new highs on 1 year and the new lows on 3 months. I will reduce the number of visible inner windows to 3. From November till April 2024, we see a relatively flat red line. But from April, the red line moves more violently, and the green line also decreases in value both on the 1 year and on the 3 month chart. Now I'm gonna zoom a little bit further. When the red line stays below 20, there is no real correction. Now, looking at pure data can be very tricky and lead to misinterpretation. That's why I added 2 lower inner windows. I'm gonna move like this. The middle inner window shows the difference between the number of shares making a new bottom at 1 year, the number of shares making a new high on 3 months. If this turns red, there is an upward momentum. However, if the histogram turns green, we need to pay attention. This isn't the case yet. It becomes interesting when the period is extended to 10 years and the frequency is set to a week. Again, I'm not looking to the pure data, something like this. When we see a green bar in the middle inner window, we notice that a bottom is in for the S&P 500. That for the market momentum. Finally, let's look at the action in oil and gold. For oil, we see a very low RSI, which in the past has been an opportunity to buy. The easiest way is to buy oil companies or an ETF in the commodity or stocks. So, very important, set your alarms in the energy sector. For gold and silver mines, we see a correction. The important thing is to focus on the GDX-SOL ratio. The 1.10 zone shouldn't be broken upwards. Maybe we could see a similar scenario as in June, August. So the curve break below an important support zone. After a few weeks, it tested the zone, and after that, it drops heavily. If we get that similar scenario, that could be an opportunity for a second entry or for those who have missed the train. Voila. Thank you for watching this video. I wish you all a profitable June and I'll hope to see you next time.